Pretiorates. Thoughts 74. Make copper expensive again. The Trump tariff effect. What was the hottest topic on the financial markets this week? Trump's tariffs. And next week? You guessed right. Trump's tariffs again in all likelihood. The market is now pretty sure copper will also be affected by the import tariffs, and sooner than expected. A clever idea? Well, yes, it will make the brown metal more expensive, but that seems to be the lesser evil for the Trump government. Better expensive copper than no copper at all. The real problem, however, lies deeper. The approval procedures for the U.S. mining industry now resemble a jungle of regulations and requirements. It now takes an average of 29 years from discovery to production of a new mine. According to S&P Global, this is the second longest lead time in the world after the African country of Zambia. Without a secure copper supply, Silicon Valley and Co. can bury their ambitious tech projects, be it for AI or data centers, right away. Even the green energy transition will remain a distant dream if the crucial metal is missing. Grand visions are pointless if the raw materials are missing. We can already see how quickly markets adapt. Copper is rapidly moving from London to the USA. If Trump actually implements the threatened 25% import tariff, and this is very likely, copper will soon be exactly 25% more expensive in the USA. The market has long since reacted to this. On the New York Metals Exchange, copper is already trading over 15% higher than on the London LME. It is interesting to observe how many open contracts there are on the futures market. This allows you to track the level of investor involvement. The more involved they are, the more overbought the market is, and therefore close to a top. We already experienced a massive price rally a year ago, at that time due to supply bottlenecks. But while non-commercial investors made a lot of money back then, their influence is largely absent this time. The current price increase is happening without their involvement, an unusual phenomenon. Normally, price spikes occur when a product becomes scarce. Then the spot market prices exceed the longer-term futures, a situation known as backwardation, and historically, this has been the case every time copper prices have risen. But this time it is different, as the Trump policy with import tariffs is creating a new situation. There is enough copper available in the short term, but the price is rising anyway. For years, China has been responsible for more than half of global copper demand. Recently, however, the economy there has been rather weak and demand has been correspondingly lower. But since the beginning of the year, there has been a turnaround. The number of open copper contracts on the Shanghai Metal Exchange has suddenly risen massively. This is particularly exciting because China's credit impulses, an indicator of future industrial activity, do not actually point to increased demand. Past experience shows that if the number of loans increases, industrial demand picks up in around 12 months, and where there is more industry, the price of copper also rises. Conclusion. The U.S. mining industry is struggling with massive regulatory hurdles. In less than 2 months, the import tariffs imposed by U.S. President Trump have already led to companies making commitments worth almost $2 trillion for new production sites in the USA. However, the mining industry needs less bureaucracy. If nothing changes, the USA will have to continue importing large quantities of copper. If China then also gains economic momentum, the copper market will become even more exciting. Remember that these thoughts are not investment recommendations, but only our opinion. For recommendations, contact your own investment advisor. Don't forget to give us a thumbs up below to help us keep creating this great content for you. And don't forget, if you register directly on our Substack website, you will receive my next thoughts at least 1 day earlier. Check out the Substack link in the description, and best of all, it's free. I wish you great success with your investments and see you for our next market update.